Hello and welcome to myfinanceteacher.org. Let's talk about gold today. The movements over the last few days have been quite interesting. Let's talk about the outlook over the next several weeks. Before that, a bit of a commercial break. myfinanceteacher.org, which is a community of like-minded investors where I make regular updates on a range of markets, including precious metals, cryptocurrencies, stock market indices, energy, including uranium and fossil energy, as well as commodities such as copper, grains, and others. One of the interesting products in the community is the model portfolio, which is transparent, showing all of the history of my trades starting in July 2020. So that's complete transparency with the total gains without any leverage. So that's without taking too much risk, is around 55% between July 2020 and October 2021. With a 2x leverage, one perhaps could double the portfolio size in the same period. So if you want to see what's going on in the investment community, you are more than welcome to register. Coming back to gold, this black line, squiggly line, was indicating some of my most likely scenarios. We did get the direction right, although I didn't really expect gold, didn't have much certainty that gold was going to break this resistance zone at around 1840. But with the help of high CPI numbers over the last several days, that was the record for CPI numbers over the last 31 years or so, at about 6.2% on CPI. So with the help of high inflation expectations, gold managed to break that resistance, coming to today's top around 1875. And yes, there is a chance that gold continues to push higher in the ongoing short-term daily cycle, which is now around 47 days long. Usually these cycles last for around a couple of months. Sometimes they can stretch. So if this cycle stretches to an unusually long duration, then perhaps gold might continue even higher within the ongoing short-term daily cycle, coming close to the previous high, maybe around 1915 or 1920, before cooling down into the short-term daily cycle low. That is a possibility, but I don't think it's the main scenario here. I would give that possibility perhaps around 35% chance, with a 65% chance assigned to the scenario where gold cools off down from here into that short-term daily cycle low. Perhaps I might adjust the price levels, maybe a cool down back to that support from the recent local high, maybe somewhere around 1820, 1810, before the next short-term daily cycle starts. Perhaps sometime in early December for a bit of a Christmas rally, for a bit of a Chinese New Year rally perhaps. And in this case, I would like to, again, adjust the height of that rally. Maybe that can bring gold up to that 1920 level. That's our next resistance zone. Or perhaps there would even be a chance for gold to test the next resistance zone from these couple of highs in November last year, as well as January this year. That's somewhere around 1960. Perhaps that might happen sometime into the Chinese New Year. That's January, February. But by then, of course, the ongoing intermediate cycle, which started over here in early August, will be already quite old, and that will be time for a bit of a correction down into the end of the intermediate cycle low. So that is now my most likely scenario. Let me bring this back down to around 1920, 1918. And perhaps the duration of that next cycle should also be adjusted, as those usually last for a couple of months. So that's my general expectation on gold right now. Looking at the 14-day RSI, we see that it has touched overbought levels over the last few days. Yes, it hasn't gone deeper into overbought yet. So yes, as I mentioned, there is a chance that the ongoing short-term daily cycle pushes higher into that resistance around that 1915, 1920. But as I mentioned, the chance for that is probably around 35% chance. Not a great possibility there. And that kind of agrees with the US dollar. Usually the moves in the US dollar, DXY and gold, go in opposite directions. Although over the last few days, with the strength in both, we see that gold doesn't have to drop when DXY rises, especially when there are greater inflation expectations, as we saw over the last several days. So switching down to the DXY, we see that over the last few days, DXY has risen as well, Again, that kind of agrees with our black squiggly line. The actual level is not easy to forecast precisely. The ongoing short-term daily cycle in dollars seems to be only at day 18 so far. So perhaps a bit of a push higher as the cycle is still pretty young. Maybe another few days higher, 1 or 2 weeks higher before the cycle tops and goes down into the short-term daily cycle low. So over the next 1 or 2 weeks, as dollar strengthens, that would kind of agree with my expectations for gold to cool down a little bit before the next push into the new short-term daily cycle. And another thing that kind of matches with these expectations for gold is some of the recent news coming out in terms of possible Fed nominations. Perhaps some of these news might actually push the next cycle top closer to the next resistance of 1960 rather than the nearest resistance around 1920. And the news that I'm talking about is that Miss Brainard, the member of the FOMC, the Fed, was recently interviewed for a possible replacement of Jerome Powell as the Fed chair. And if that happens, that is likely to help push gold much higher, perhaps, as I said, to those next resistance levels around 1960, as Miss Brainard is seen as the most dovish member of the FOMC. And coming back to the chart to align some of the timings of the news with our expectations for the cycles, usually new Fed nominations take place sometime in November. The previous nomination for Powell came in early November. If Biden administration is a little bit late with that, perhaps the nomination comes out over the next maybe 1 or 2 weeks. That will allow gold to cool down a little bit, and as that nomination comes out, perhaps that will be a very good news for gold, as the Fed is likely to have a new, very dovish chair. And lastly, let's have a look at gold seasonality, which, as I mentioned, usually pushes gold higher into that Chinese New Year, as you see, sometime around January. As you see, January is the best performing month for gold. And in the lower part of the screen, looking at the optimism index for gold, we see that optimism index is still not close to the red lining yet. So as I mentioned, there is still a good chance for gold to push higher, perhaps in the going intermediate cycle. Although the short-term daily cycle is perhaps getting a little bit stretched. So a bit of a consolidation perhaps over the next 1 or 2 weeks before another push higher into that cycle top. And that concludes the video for today. If you want to see gold at 1960, you gotta hit that like button. I think it's gonna help gold traders immensely. For more details on a range of assets, check us out at myfinanceteacher.org. Have a productive Monday and good luck in your trades.